Good afternoon all. Today I am going to discuss West Asia turmoil impact on Indian economy. We all know the war is going on between Iran and Israel, right? Today in this video I am going to explain this war fallout on economic perspective. If you want a general briefing on this Israel-Iran war, we already uploaded a video in our channel. Please go and visit the video. In this video, I am going to explain the economic repercussions of this war. Government, investors and traders must have to brace for the high volatility in global trade following the US action and US involvement in the Israel and Iran war. The US has struck the Iran nuclear sites 2 days back. And what is the Iran's reaction? Immediately, the Iran parliament has passed a resolution to block the Strait of Hormuz. Yes, you heard it right. Strait of Hormuz is on the verge of closure. The reason why I have written these lines to save the time. So what is the impact on the crude oil? Today our main focus is on crude oil. The crude oil prices has already soared from $62 per barrel to $76 per barrel. To $76 per barrel in June month alone. A staggering 22% of hike in prices. And the experts, they believe, what experts are believing is, if this situation goes on, if the Iran successfully block the Strait of Hormuz, the crude oil prices may soar up to $130 per barrel. This is no joke. This is a very serious concern for global trade. Why Strait of Hormuz is very important, especially for global trade? Despite the fact that Iran is not a major global oil supplier, but still it can disrupt the global trade and crude oil prices. Why? What is the reason? The Strait of Hormuz accounts for 20% global oil supply trade. 20% of global oil supply trade. Supply trade via Strait of Hormuz. Now you see the importance, right? Even though the Iran is not a major supplier of crude oil, but if it wants to choke the region, if it wants to disrupt the crude oil trade, it can do that, because 20% of the global crude oil supply trade via Strait of Hormuz. That is why strategically and from trade perspective, this point is very important. This region is very important. And what about India? We all know 85% of Indian crude oil demand meets through imports. Out of this 85%, 40% of the crude oil trade via Strait of Hormuz. This is why this region is very important for India. Peace and tranquility in this region will secure our energy demand. It's very vital for our India's economic growth and energy security. So this is the importance of Strait of Hormuz. And what is its direct impacts on Indian economy? Without wasting much time, let's delve into the topic. Import inflation. What is import inflation? I already mentioned that 85% of our oil demand meets to the import, right? A small rise in the oil prices will result in the rise of refinery oil. right? If the price of refinery oil increase, and I must say that refinery oil or crude oil act as a raw material for many chemical industries. The Vaselines and all the chemical sunshine lotions and everything, they use petrol refined oil products as the raw materials or ingredients. Chemical sector will get impacted, and transport sector. We all know trade in India majorly through via road network. So major trade done via road network. Any increase in the price of oil will directly increase the price of goods and services. Example, fruits, vegetables, agriculture produce and manufacturing industries, and you name it, and everything is dependent on the crude oil prices. Once the price of goods and services increase, what will happen? Inflation in India will increase. Inflation in India increase. Once this inflation breaches the RBI's target of 4 plus or minus 2, what RBI will do? RBI will increase repo rate of interest, which will adversely impact the economic growth. So that is why hike in the oil prices is not good for India, especially we are a nation which imports 85% of our crude oil demand. And second, current account deficit. I already told you that the price of crude oil soared from $62 per barrel to $76 per barrel. And this is as of 23rd 6 2025 prices. Please note it down. So a staggering 22% hike in prices. Means instead of paying $62, now we are paying $76. A $14 hike for the same quantity. That should be remain. Here we are paying for same quantity. This is the important thing to keep in mind. This will eventually result dollar outflows. Right? Foreign currency outflows means dip in forex reserves. And in recent economic survey and budget, the government of India has projected the current account deficit for this financial year would be around less than 1% of GDP. But if this trend goes on, it will breach the limit of 1.3% of GDP, which will directly impact the forex reserves and India's growth. And third one is rupee depreciation. Do you know dollar is also known as petrodollar? Do you know the reason why it is called petrodollar? Any trade with respect to crude oil should be settled in dollars. That is why dollar is also known as petrodollar. I hope you have a basic understanding on forex, foreign currency exchange market. This is a market where we buy and sell rupee for dollar. What will happen? The increase in the price of crude oil will increase the demand for dollar, right? Instead of paying 64, now we are paying $76 per barrel. This increase the demand for dollar. What the traders will do, they will go to forex market, foreign currency exchange market. There they will sell the rupee. Sell the rupee and they buy the dollar. The more you sell the rupee, the weaker it will become. Yes, the more you sell the rupee in the international market, the weaker it will become, because It's simply supply will exceed demand. Supply for rupee exceed its demand. So that is the major reason for the rupee depreciation. So which is not good for our economy. Already the rupee is currently trading at 87 rupees per $1. And last but not least, freight cost. This is very important. We already witnessed this freight cost increase during the Red Sea crisis, right? What are the goods and services we are trading? The price of goods and services will increase. Reason? The freight cost will increase. Why the freight cost will increase? Due to this uncertainty is war kind environment, traders will prefer air route. Exporters and importers will prefer air route over sea route. So we all know air route is expensive than sea route, which will trigger the price of goods and service. And number 2, reroute. What is reroute? Already the exporters urged the Ministry of Commerce and Industry to reroute their shipments to West Asia from Chabahar port instead of Babar Abbas port. So they urged the government of India or Ministry of Commerce and Industry to ship their shipments, to reroute their shipments to West Asia. So what kind of exports can you expect? West Asia from Chabahar port instead of Babar Abbas port in Iran. What are the major exports to West Asia? Pharma, yes, pharmaceuticals, pharma, and number 2, basmati rice. Yes, you heard it right, basmati rice, and engineering goods, etc. And second reason is reroute. And what is the third reason for freight cost? War risk premium. Have you ever heard this word? War risk premium. Do you know what is war risk premium? War risk premium is that the premium paid by the shipping companies to protect their vessels against the risk of this conflict or war in a region. This is the premium paid by the shipping companies. See, you know the insurance, right? It will work in the same way. So we pay premium to get insurance, life insurance or non-life insurance. In the same way, the shipping companies also will pay premium to protect their vessels from the risk associated with war and conflicts, especially in a region. War and conflict in region. If the region become more unstable, more chaotic, what will happen? The insurance companies will increase the premium, and increase in premium results in increase in freight cost. And in the end, all these costs will pass to the end customer, right? Customer will be the loser, okay, not the businesses, okay. Many businesses will make profit by speculating, by taking advantage of this opportunity. See, insurance companies, they will get profit, traders, they will get profit. End of the day, this burden will be passed down to the customer. So this is the summary. And what are the repercussions? Import inflation, number 1. Number 2, impact stress on current account deficit. Number 3, rupee depreciation. Number 4, increase in freight cost. Now that you understand the overview of this topic, let's summarize this. In last decade, India has diversified its oil imports. It's gradually going away from the Gulf nations. Yes, it has increased the imports from Russia. In 2014, it used to be hardly around 1% of the crude oil imports from Russia. Now it has increased to a whopping 38% of our total crude oil imports. Yes, and this is Russia and USA also accounts for around 4% of our crude oil imports. Yes, India is in the last decade, India has diversified its crude oil import destinations, but still volatility in the Persian Gulf will pose a significant risk to India's economic growth and India's energy security. Thank you for watching. If you found this video helpful, please like, subscribe and share. See you in the next video.